China's economic resilience, diversification, and domestic market strength in the face of trade tensions. The ongoing trade war between the United States and China has cast a long shadow over global markets, sparking volatility and uncertainty. However, amidst this turbulence, China's economic strategy is revealing a remarkable degree of resilience and adaptability. Recent statements from Chinese officials underscore a significant shift in the nation's trade landscape, highlighting a deliberate diversification away from over-reliance on the U.S. market and a renewed focus on cultivating its vast domestic market. Liu Daliang, a spokesperson for China's Customs Administration, recently made headlines with comments reported by the state-owned Xinhua agency. Liu's statement emphasizes the considerable progress China has made in diversifying its trading relationships, effectively reducing its dependence on the U.S. This strategic shift reflects a proactive response to the escalating trade conflict initiated by the Trump administration. The trade war's origins can be traced back to April 2nd, when President Trump announced tariffs targeting numerous countries worldwide. The initial shockwaves sent ripples through global financial markets, underscoring the interconnectedness of the global economy. While some initial tariffs were partially rolled back after a 90-day grace period, the conflict intensified with China becoming a primary target. The U.S. imposed tariffs totaling 145% on Chinese goods, prompting a forceful response from China, with retaliatory tariffs reaching 125% on U.S. imports. This tit-for-tat exchange of tariffs has created a complex and volatile situation. While the White House initially offered some temporary relief, extending exemptions to certain electronic goods such as smartphones, laptops, and semiconductors, this apparent concession later faced ambiguity. Commerce Secretary Howard Lutnick's subsequent statement suggesting these devices would eventually be subject to separate semiconductor tariffs scheduled for implementation within a couple of months introduced further uncertainty. This back-and-forth highlights the fluid and unpredictable nature of the trade negotiations. The implications of this trade conflict extend far beyond the U.S.-China bilateral relationship. Other nations, even those not directly involved in the central dispute, find themselves caught in the crossfire. Vietnam, for example, has emerged as a significant trading partner for the U.S., ranking as the 8th largest source of goods for American consumers. However, Vietnam now faces the looming threat of 46% tariffs once the 90-day reprieve on certain tariffs expires, illustrating the widespread ramifications of the trade war. China's strategy of diversification is not merely a reaction to external pressure. It's a long-term economic plan emphasizing the cultivation of a robust domestic market. This approach involves significant investments in infrastructure, technological advancement, and fostering domestic consumption. By focusing on expanding internal demand and strengthening its ties with other global partners, China is seeking to mitigate the impact of external shocks and build a more resilient and sustainable economic model. This approach acknowledges the importance of global trade while simultaneously reducing dependence on any single market, including the U.S. The ongoing trade war necessitates a nuanced understanding of the strategies employed by both sides. China's response underscores its determination to navigate these challenging times by fostering economic resilience and leveraging its growing domestic market. The focus on internal growth and diversification positions China to weather the storm and potentially emerge stronger in the long run. The implications for the global economy are profound, as the outcome of this trade conflict will undoubtedly shape the future of international trade and economic relationships for years to come. The continued evolution of this complex situation demands close monitoring and insightful analysis to comprehend its full impact on global markets and individual economies. The strategic maneuvers of both the U.S. and China will continue to shape the landscape of global trade, making this a critical period for observing economic shifts and geopolitical dynamics.